Welcome to Technests. Today we will dive into the topic of trading for payouts, strategic thinking for funded accounts. Funded accounts are often seen as the finish line of prop trading, the reward after passing tough evaluations. But the truth is, the real challenge begins after funding. Surviving, protecting your capital, and trading smartly for consistent payouts is where traders either thrive or blow up. Many treat funded accounts like a victory lap. But payouts demand strategy, patience, and discipline. Prop firms don't set rules to hold you back. They set them to protect capital and teach you professional habits. Once you think strategically about payouts, the rules stop feeling restrictive. They become the framework for long-term growth. The first big shift is moving from challenge trader to income trader. During an evaluation, speed and aggression can help you pass. But in the payout phase, survival and consistency are everything. Don't chase big wins, stack smaller, consistent ones. Don't swing for home runs, focus on repeatable edges. Don't over-leverage. Treat the account like it's your business capital. Your funded account isn't a lottery ticket, it's your paycheck. The traders who win long-term aren't thinking about the next monster day. They're focused on their next stable payout cycle. To earn payouts consistently, you need a trade structure that aligns with firm rules. Start with small trade sizes, 1 or 2 contracts on ES or NQ, and micros on gold until you build a buffer. Take profit targets should be realistic. On ES, banking $200 to $400 per trade is smarter than swinging for $1,000. Stop losses must be disciplined. $100 to $250 keeps you alive. And always respect daily max loss rules. If your cap is $1,200, risk no more than 25 to 30% of it. These mechanics don't limit you, they stabilize you. They turn payouts from maybe into predictable milestones. Picture a $50,000 ES account. The rules: a $2,500 trailing drawdown, $1,200 daily loss cap, and bi-weekly payouts. A smart plan is to risk $200 per trade, aiming for $400 profit. Limit yourself to 2 setups daily, with a weekly goal of $2,000. In 2 weeks, that's $3,000 to $4,000 net. Even with a few red days, your discipline keeps you payout eligible. The edge isn't in fancy strategy, it's in discipline. Now consider an NQ account with a $100,000 balance, a $3,500 trailing drawdown, a $2,000 daily cap, and monthly payouts. You trade 1 contract, stop loss at $300, target at $900. Cap your daily loss at $600, well below the firm's max. 3 to 4 trades per day at just a 50% win rate can still generate $7,000 to $8,000 net in a month. That's how stability and payouts go hand in hand. Gold trades differently, more volatile, more sensitive to news. Imagine a $50,000 gold account with a $2,500 trailing drawdown. You begin with micro contracts until you build a $2,000 buffer. Risk $250, target $500, trade 1 or 2 setups around the New York Open. Avoid high-impact news like FOMC or NFP. With this routine, you grow slowly but steadily, $1,500 to $2,000 per payout cycle. Not explosive, but reliable. And in payouts, reliability wins. But funded survival isn't just mechanics, it's mindset. Traders fail when they increase size too quickly after a win. They revenge trade after a loss. Or they forget that payouts, not bragging rights, are the goal. The fix is simple. Treat payouts like a salary. If you hit your weekly goal, stop. Consistency pays more than chasing every trade. Funded account rules may feel restrictive, but they're safety systems. Daily loss limits prevent emotional spirals. Trailing drawdowns force you to lock in profits. Consistency rules reward measured growth. These aren't shackles, they're guardrails. They keep you alive long enough to get paid. The biggest threat to payouts isn't the market, it's human impulse. That's why automation is a game changer. With tools like TradeRx and Dr. Markets, discipline becomes automatic. Execution is consistent, trades are spaced intelligently, and rules are enforced without error. Automation makes payouts depend on your system, not your willpower. Take this expanded example. A trader with a $100,000 ES account risks no more than $500 per day. Trades 2 contracts until building a $3,000 profit buffer. Once the buffer is built, trader scales to 3 contracts. After the first payout, trader drops back to 2 to protect capital. In month 1, trader nets $4,200 and withdraws $3,000 from multiple funded accounts. In month 2, nets $5,100 and withdraws $4,000. The account survives both cycles. The secret wasn't big wins, it was cautious rhythm. Think of payouts as a business cycle. Patience means some days you won't trade, and that's part of the edge. Restraint means shutting down after a solid win to protect the day. And the business mindset means payouts equal salary. Trading is your business. Firm rules are your compliance department. The traders who succeed in payouts don't think like gamblers, they think like entrepreneurs. Now let's address some quick payout questions. How soon can you request payouts? Usually 7 to 30 trading days, then bi-weekly or monthly. Should you increase size after your first payout? Not yet. Prove consistency with 2 or 3 payouts first. What happens if you hit your trailing drawdown? The account is terminated. Always protect 20 to 25% of your buffer. Can conservative trading still pay? Yes, $500 to $1,500 bi-weekly is common. And what's the biggest mistake after the first payout? Overconfidence. Traders overleverage, ignore rules, and blow the account. Trading for payouts isn't about glory, it's about longevity. Evaluations test your skill under pressure, but payouts test your discipline under opportunity. The traders who succeed aren't chasing every move. They're respecting rules, structuring trades, and treating payouts like income, not jackpots. Thank you for watching. To dive deeper into funded trading strategies, automation tools, and trader education, make sure to explore more at Technests.ai. Your journey to consistent payouts starts here.